TradeTheMBI.com. This is John. This report is for the 22nd of March, and well, we broke above that 4,008, so that was the critical level that we were talking about. You can see Magenta is breaking through at this particular point. I still think that that 4,008 is going to be a magnet as long as we're in this state of uncertainty. Yes, it's the counter trade to the upside, given what we've been seeing from this idea that the Fed is going to be unlimited easing. And you can see DOC off that dip of the orange now have green crossing sign, so that is the bullish indicator clearly. Um, the pivot lower is definitely something we were watching for. That would be what we would call our little spider effect, and that would be a negative trigger. So it's just something to be aware of. But for now, it all looks rosy. Same for the NQ. The NQ was already stronger. There was no question. It wasn't even close relative to the S&P, and has been on an upward trajectory for the past week. So, completely different setup for the tech side of things, and actually approaching its relative highs of uh, late January there. So, um, definitely showing a divergence between tech and of course, tech was the leader in cost cutting jobs, everything else, just to be prepared for any eventuality. And I mean, with their view, they can always just hire back if they need to, but at least they've cut their costs. Treasuries obviously yield improving slightly, but again, the demand is exceedingly high, especially given where the market is now. If the market begins to show higher return relative to the year, you could see some drawdown in treasuries. But from a safety standpoint, people moving their money out of banks out of fear, definitely going into treasuries to park the money. It's the safest bet, particularly if they want the guarantee of capital preservation. Oil still under 70, which is fantastic, but right on that precipice. It's a bit of a little buy run right there, but that would be huge actually if it's able to maintain that level for the next month or so. And that's caused a bit of softening in gold, not unexpected, simply because inflation pressures are going to die down. It doesn't change the viewpoint of excessive amount of money. So I would expect any pullback just to be some of this positive extreme fill, but certainly got to head back north. The same thing you're going to see with cryptocurrencies. Likewise, the euro again in this massive push for what reason? Oh, yeah, because the Eurozone is actually in more trouble than everyone previously thought. And almost all of their banks are zombies anyway. But yeah, that's just the way it works. I mean, central banks definitely have their plan, and maintaining currency stabilization within counterparty trade is important for them. And euro, in their view, is probably still what they would consider undervalued from their target, which they want at least somewhere in the 114, 115 range. So they're still way off that, but I think they'd be fine in this 107 to 111 range, which has been pretty comfortable. It gets pretty curious when you get down into that 105, 104 range. So from a Bitcoin standpoint, again, it's pretty much mimicking what gold's doing here in this particular case. It was just a little outside move from Bitcoin, but then again, Bitcoin had suffered more than ETH and the others. So probably for a little bit of a consolidation, but the next credit event will probably cause a spike from them. From a 50K standpoint, sold out of the first position, but now double set up into a couple of GAM setups right there at this particular stage. From a 5K standpoint, the previous day we had already started the run coming up. It got a little bit of softness, but reconstituted the buy, and that led to this move again from that 92 to the 40.31. Literally fit exactly within that range, and that's from like a while ago. So once they set up some of these serious algo loads, they just keep replaying them. Overall, the day wasn't extremely heavy. It was moderate size, but you can see that even when we had the shorts, they still had nice runs to the south side, and the final buy took us up to the 40.31 upside, and it would look somewhere to that 40.23, 24 range that usually classic pullback to. We have some positive extremes that go back right into this middle range, but none of that's significant enough because it's already been filled back. It's not until you get the breakout, which is just under the 20 level, to where there's any kind of need for a positive extreme fill. But as always, I would continue to look for the latest signals. I think we're going to get plenty of swings both up and down, so it's just going to be the mean reversion. And I think that makes it easy just to follow the paint bars and go from there. As always, though, trade well. Look for me on Skype chat. Have a good one.